can now get a loan in as less as 6 minutes sitting where you are on your mobile phone. And that's because ONDC is the one who is bringing in that for you. After hitting a major milestone of 12 million monthly transactions, the state-owned Open Network for Digital Commerce, or ONDC, is now making waves with a brand new offering, credit that's fully digital, paperless, and available in just 6 minutes. This game-changing feature is already integrated with 9 buyer apps, also known as lending service providers, and 3 lenders. It's a big leap forward in ONDC's mission to make credit services more accessible and efficient for everyone. The first product in this digital lending push is unsecured credit, available to both salaried and self-employed individuals. So whether you're looking for quick cash or a little extra financial flexibility, ONDC has got you covered now. The buyer apps on board include big names like Easypay, Paisabazaar, Tata Digital, and a few others as well. While lenders like Aditya Birla Finance, DMI Finance, and Karnataka Bank are ready to provide the funds. ONDC, which started as a government initiative to boost e-commerce in India, isn't stopping with loans. They are also rolling out sachetized insurance and investment products for its users. In fact, they've already kicked off transactions in health and marine insurance and are developing life insurance products that could be live by the end of this year in December. The company is also expected to make its first mutual fund transaction by September. As next month, ONDC will also most likely launch these services officially once they cross 100 transactions each. And to talk about that, we have a very special guest joining us live here on In Your Interest. We have Mr. Feroz Aziz, Deputy CEO, Anand Rathi Wealth. Feroz, thank you so much for taking time out to be with us here on the show. Simple question, too easy, too quick, or do you think much needed? Feroz, I think you need to unmute yourself. So a loan in 6 minutes, some would say too easy, too quick.
Oh, sorry for that technical glitch, but yeah, I think it is quick, too quick. Paperless is, I think, the way to go, but it's much needed. See, what happens is if you're speaking about Bharat getting financialized, it's not just savings which needs financialization, credit also needs financialization. And then being paperless, not just for investments and insurance, but also to borrow is very critical. I think that seamless process, I think India requires a lot of evolution in the credit market, right? And I think this is very needed, of course, quick, but needed to be paperless.
Okay. The fact of the matter is that ONDC, we know you will even officially launch some of the services once they cross a certain number of transactions. It's also about how many people that the platform is able to attract, isn't it, for a product like this to take off?
Yes, see, I think for a product like this to take off, because see, when you're borrowing money, it's generally a pull product. Now, I personally think this feature can attract far more clients or borrowers on the platform because it's doing an aggregator's job. There are different lenders, so there's going to be competitive environment, point one. Because there are NBFCs, ticket size is going to be reasonable because you're speaking of self-employed and employed or salaried as well. So aggregation and unitization of borrowing, aggregation, I think that requires that kind of fintech platform. I personally think that will attract a lot of clients because when you need money, it's a pull kind of a product. See, for mutual funds to be bought, there is some degree of catalyst which is needed. You will have to see some mutual fund say an ad or some distributor has to nudge you. A friend has to nudge you saying, why don't you save? But if you need money, your friend doesn't need to tell you that you need money. So it's a full product vis-a-vis investments and insurance, which is a push product, or at least a product which requires an external catalyst. So I personally think this will bring more people on the platform and the kind of cross-selling which is possible, like you alluded to, in the next few months, because mutual fund transactions could happen in September and health insurance, marine insurance, all that will also get some degree of cross-selling push because of this full product.
Right. As we speak, Feroz, as this product comes into the marketplace, RBI has been cracking down upon, unsecured loans. It has been cracking down upon peer-to-peer lending as well. So there are some concerns over here that probably Indians are taking too loans too easily, too many.
See, I would see, regulator's job is to protect an investor or a borrower. Okay, that's the regulator's job. And RBI has been the best regulator in the world. And I can very easily say that, not one of them, but the best. And I'm telling it with a lot of data, but I will not bore the audience with why I'm concluding that. And I'm not flattering the regulator. Point one. Point two, if you look at, Saab, when you look at the kind of borrowing which is happening and the kind of recovery which is happening in the process, there is a lot of black blood which is being created when it comes to delegated DSA driven recovery processes, delegated off rolls to somebody else for recovery. So delinquency rates have not been thought about, and the recovery agents have been very, very strict and very non-flexible, and that's resulting in a lot of other damage, collateral damage. And I think that's what the regulator is wanting to control. See, it's for a P2P lending, there is an attractiveness with respect to the spreads. India's biggest challenge is today, even if an SME company goes to borrow, the borrowing spreads with respect to Government of India bond is as much as 500 bips, 700 bips. Now, that doesn't happen in any emerged economy or the top 4-5 economies. So what is happening is people are lending in the lieu of a great net interest margin, and they're being very harsh when they're seeing delinquency. And they're not accepting delinquencies because the regulator does not accept NPAs so kindly. So I think this catching them at the stage of lending so that there is not too much of a problem recovering is what I think is a very, very good thing to do. And I think some degree of checks and balances, especially in a credit business, is very critical before it balloons into something which is unmanageable.
All right, Feroz, before we let you go, quickly talk to us. ONDC is not stopping with just loans. It's launching insurance and investment products as well. You know, a mutual fund is set to be out by next month. Talk to us your thoughts on it. Will it be a fund of funds?
See, I personally think there is nothing so unique about mutual funds being available on a click of a button, health insurance being available in a click of a button. There are some fintech platforms which are ahead of the curve. I think this is going to be the product, the current product, which is loans, is going to be creating a catchment area for mutual funds and insurance. So I don't see immense innovation there. For sure, and it's not going to be a paradigm shift or something which is out of the box. It's just that it's going to help the platform in terms of garnering more mutual funds. Mutual funds already are in, like last month, there was 37,000 crores of net sales in equity, with 23,000 crores of gross sales in SIP alone. In equity mutual funds, there were 20,000 crores of SIP. I think India has now started to begin to financialize their current 800 lakh crores of savings is what India has. It is trying to financialize it. It is only 6.7% in Indian equities. And last year it was 4.3%. So only 6.7% has gone into equity. These platforms and the wrapping, if it is a fund of fund, it makes it a very simple solution. I really hope fintech helps us penetrate the equity allocation, because it's impossible to beat inflation if the allocations are as little for Indian households as 6.5-7% in equities. So I'm very, very happy about it, but I can't comment that this is a very out of the box idea, but surely the credit place can bring a catchment area.
All right, we will leave it at that. Feroz Aziz, Deputy